Hey everyone, today we're going to dive into a really powerful indicator called volume zones. Now, this is a tool that's designed to help you ignore all the noise and confusing signals you get from a price chart and actually find true support and resistance. So, how does it do that? Well, it tracks the one thing that really moves the market, what the biggest players, the whales, are actually doing. So, here's our game plan. First, we're going to talk about why traditional support and resistance so often fails us. Then, we'll start following the real money by looking at volume, and after that, we'll add a secret ingredient called delta to get the full story. Finally, we'll put it all together to map out what the whales are up to, and of course, learn how to read these zones on a chart.
All right, first things first, let's talk about something that drives traders crazy, especially if you're doing quick scalps or trading binary options. It's a massive point of frustration for so many people.
I mean, we've all been there, right? You draw that perfect line, you connect the highs or the lows, you put on your trade expecting a nice, clean rejection, and then what happens? The price just blows right through it like it wasn't even there. It's infuriating, and it can make you question everything you're doing. So what is going on here? See, here's the thing. Just connecting the dots between old price peaks and valleys, it's just not the full picture. It's kind of like seeing footprints in the sand, but having no clue how big the battle was that left them there. The real insight, the new idea, is to stop focusing on those surface-level price touches and instead dig down to find the exact spots where the biggest fights between buyers and sellers are actually happening. We're talking about the zones with the highest volume. So this brings us to a complete change in perspective. If we want to find these powerful zones, we have to stop obsessing over the price candles and start following the money, the actual volume that's being traded. Our whole mission here is to pinpoint these market battlegrounds. We're not guessing anymore. We're looking for hard, cold evidence of where the major institutions are putting their money down and fighting for control, because those are the zones that are going to tell you where the price is headed next. Okay, so the way it works is actually pretty simple. The indicator just adds up all the individual trades, that's the tick volume, over a certain amount of time. And right away, that helps us spot the price levels with the most action. Now, in theory, these high-volume spots should be our true support and resistance. But as you're about to see, just knowing where the fight is happening, well, it turns out that's not quite enough. There's a critical piece of the puzzle that's still missing. And this is where it gets really interesting. We're about to add the secret sauce, the one thing that takes all this raw volume data and turns it into something you can actually trade with. And that secret sauce is called delta. So what in the world is delta? Well, to put it simply, it's the net difference between all the buying and all the selling that happened inside one of those high-volume zones. So it doesn't just tell us that there was a big fight at a certain price, it tells us who won the fight. It shows us if aggressive buyers or aggressive sellers are really in command of that zone. And this is how you avoid getting played by the market. Just because the price is going up, it doesn't automatically mean that buyers are in control. That's a classic trap. You might see price getting pushed higher, but delta can actually show you that sellers were more aggressive inside that move, which could be a huge warning sign for a reversal. Delta helps you see right through those kinds of traps. And bam, that's it. Once you add delta, everything just clicks into place. We can now clearly identify which zones are like fortresses built by aggressive buyers, that's real support, and which zones are controlled by aggressive sellers, real resistance. This tells us which zones we can actually trust for a trade. Okay, so now we know how to find these powerful fortified zones. Let's talk about how this all comes together to help us track the really big fish in the market, the whales. The person who created this indicator calls it a true treasure map. And honestly, that's the perfect way to describe it. Instead of getting lost trying to navigate a confusing sea of price candles, you're given a clear map that points directly to where the treasure, those high-probability trading zones, is buried. Okay, now this is the absolute key to understanding why this works. The big players, the whales, they can't just click buy or sell whenever they feel like it. They need to find areas with a ton of liquidity to fill their massive orders without moving the price against them. This indicator is specifically designed to find those hunting grounds. So, when you identify these zones, you are quite literally following in their footsteps. All right, enough theory. Let's get our hands dirty and see what this thing actually looks like on a chart and how it makes all this invisible information visible. So, take a look at the chart. See those horizontal bars popping up on the right? Each one of those bars marks a zone of high volume that the indicator has found. And the number right next to it? That's the net delta. So a negative number,
like -10 or -39, tells us that sellers were the dominant force in that specific zone. And here, this is where you see the magic happen. Just look at that circled area. Price pushes right up into that zone marked with a -39 delta. I mean, that's a fortress of sellers. And what's the result? An immediate, powerful rejection to the downside. That's not just some random bounce. That's price hitting a solid wall of sell orders. Now, here's something that's really, really cool and kind of unique. The indicator can actually track volume even where the price isn't currently trading. So imagine a huge wall of buy orders starts building up at a price way below where the market is now. The indicator sees this latent volume accumulating. What that means is if the price ever drops back down to that level, you already know there's a powerful support barrier just waiting for it. The way it's visualized is also super easy to read. It's really intuitive. The length of the bar itself shows you how strong the zone is. So a short little bar is just a minor area, but a really long bar, like that one at the bottom with a +12 delta, that represents a massive wall of buyers. That's a very strong support level you absolutely need to have on your radar. You know, one of the coolest ways to see this in action is to just watch the candles in real time. Watch closely as the price gets close to one of these high-volume zones. You will often see the speed of the candle change, like dramatically. It will either speed up or slow down. That sudden change in volatility is your visual proof that the market just smashed into a huge pocket of orders, which just confirms how important that zone really is. So, all of this really leads us to one final powerful question. For years and years, traders have been completely obsessed with analyzing price charts, looking for patterns, drawing lines. But what if the price chart is just a distraction? What if the real story, the true map of where the market wants to go, has been hiding in the volume all along?